everyone, and warm welcome on behalf of Nasdaq. We have a great lineup here, so I'll introduce the speakers. Sitting next to me, Cameron Priest, who is the CEO and founder of TradeGecko, a company based in Singapore that provides inventory and order management services to SMEs. Jeff Chi, who is Vice Chairman of Vickers Venture Partners, a phenomenally successful VC out of Singapore and also based here in Malaysia. And then Alain Lam, he's head of capital markets and investment banking for media and tech at Credit Suisse. And Alain scarcely needs an introduction. He's a very famous tech banker here in Asia. So delighted to be here, and just to kick off with a few stats about the US market so far this year. In the first half of the year, we have seen Nasdaq has welcomed 151 new listings, 93 IPOs, and around 17 of those have come from Asian companies, so companies from our region. 70% of US IPOs have listed with us, and we expect 2018 to be the busiest IPO year since 2014. So shaping up to be a good IPO year. As the introduction said, we're a global fintech. Nasdaq's footprint in Asia is quite large. We have 9 offices, 900 staff, and we're very proud to be the technology provider for Bursa Malaysia. We also provide post-trade surveillance technology to the Securities Commission of Malaysia. And we are very excited to be here to work with entrepreneurs to help them develop their brands globally and also to transition from being private company to public company. So with that, I'll get into the panel. So for this year, the majority of IPOs have come from tech, biotech, and financial sectors. But on a granular level, what sort of industries are you seeing within the pipeline? Say, for instance, enterprise software has been quite hot sector this year. So what's your experience, I think, to Alain and also to Jeff? What are you seeing in terms of the company's businesses that are gearing up to go public?
Hi, why don't I start first? I'm glad to be here. I think this year is an interesting one in the sense that if you look at the composition of the IPOs coming out from the US versus Asia, is actually quite different, right? So Rebecca, you mentioned enterprise software. It is very much a US phenomenon at this point. In terms of the IPOs coming to the market, is still a lot of these is to B businesses. If you look at Asia, I spend most of my time in China, as you would imagine. A lot of the IPOs that are coming out this year is still predominantly to C market, right? So we've seen a lot of content-related site that has been taken public this year, like iQIYI, like Huya, like Bilibili, a lot of these video formats that has been taken public. Last week, obviously, we did our biggest IPO this year, Xiaomi, which is also a 2C, they call it internet businesses, which you can debate it, but still is predominantly a 2C market. And if you look at the pipeline, I think we've seen a couple of to B businesses, but I think so far it's still a to C phenomenon. Healthcare is picking up. I think you've seen a couple of the biotech companies seeing the Hong Kong Stock Exchange have changed the rules to allow more startup biotech companies to be listed. You see a boom in terms of biotech companies that will be listed in Hong Kong. But then I think it depends on how these things will trade in the aftermarket or how well they're perceived by the market before you see the second batch coming out. Financial services is also interesting. We see a bunch of fintech companies, quote unquote fintech companies that were listed in the US market as well as in the Hong Kong market from China a couple of years ago. It has slowed down a little bit because there are a lot of regulatory concerns in the market, and these companies now trade at 5 times forward multiples in terms of earnings. So it actually deters a lot of companies from pushing to go to the market because I think most of them can raise private capital higher than they can raise public capital. I think going forward, it's a lot of I would say the old style industrial related companies that are being we rebranded as a tech company being listed in Hong Kong. So whether it is logistics, whether it is cars, electric vehicles, right? These are the we have an old industry that are big and that existed for a long time, but you're seeing that the technology being transforming the industry, or technology driven the growth of the industry, like logistics obviously driven a lot by e-commerce, as well as electric vehicles, which in a way I think people are approaching it from different angles. Whether some people some people attack it from a internet standpoint. Somebody is saying that I'm the old car manufacturer, I'm trying to make a new car. So I think it varies, but it's fair to say that if I talk to my US colleagues about the pipeline, clearly the focus is in Asia, clearly the focus in China, and everybody is saying that China is probably, and Asia probably is the biggest pipeline coming out, even more than the US.
Hi, I think the couple things I might add to that, in many ways I think Alain is right in saying that the types of deals that are going on and listing and IPOing these days are a result of investments that were made 4, 5, 6 years ago, and the flavor back then, as far as Asia was concerned, was not really in sort of enterprise, and even healthcare is a more recent one, I think. But it's interesting to sort of look at IPOs of late and see how things have evolved over the last few years. For those looking who've done some stuff with respect to China. About 3 years ago, we saw this massive wave of Chinese listed companies in the US privatize and head towards domestic listings in China. We have a few companies in our portfolio who've embarked on that path. The reason and rationale mostly was targeted around higher valuations in China, but that is slowly eroding, and as China as the CSRC begins to tighten sort of listing requirements, we're beginning to see some of that advantages erode away. At the same time, the sort of US markets have in a way come back with a vengeance, and we're seeing a lot of IPOs head back towards the States, and that's sort of where we're seeing this wave of Chinese IPOs go towards the US. The more recent development has been, Hong Kong has been very aggressive in coming with new listing rules, relaxing listing rules, making it easier for tech companies to list in Hong Kong. And we've just begun to see the first wave. So we've seen this first wave of sort of fintech companies out of China list in Hong Kong. And the next sector to open up is sort of healthcare. So that's sort of where we're seeing from the China angle. I think Southeast Asia is also an interesting story because last year we saw, in my view, what is monumental in the industry, which is the listing of Razer in Hong Kong, and the listing of C on the NYSE. So why do I say that's monumental? Because as far as the venture community is concerned, the exit model is now proven, and so we're beginning to see massive institutional interest looking at venture markets. We see venture funds become more daring investing in later stage companies because now the exits are proven, because before they're saying, if I put money into this unicorn, when and how am I going to get out? So because of that, I think the markets have become a lot more buoyant. The unfortunate side effect of that is valuations have gone up as well, but we're beginning to see a lot of that. So from a pipeline perspective, I think we're going to see more of the Southeast Asian unicorns list, and maybe the aspiring unicorns also begin to list as well. China, I think, will business as usual. And in terms of exits, I don't think, from a VC fund perspective, I don't think we've had it so good in a long time. So it's definitely things are very bullish.
Great, thank you. And according to Renaissance Capital, the average tech IPO in Q2 this year is up 60%. What excites you most about tech companies from Asia? I guess all of you. Cameron, also you can speak from your angle as an entrepreneur. What's going on in technology in this region, and what do you think is different in this region compared to the US or other markets? Alain, I'll give that to you first.
Yeah, look, I think that people are still, there are two phenomena here. I think one is, I would say that there's still a lot of capital out there chasing ideas. And despite the interest rate increase a couple of times this year, there's still a lot of excess capital in the market, and these capital don't have anywhere to go, unfortunately. So they're chasing the alphas, and the alpha can be made in the IPO product. So, and also if you look at the IPO market this year, compared to 5 years ago, I would say that 5 years ago the IPO market is probably more diverse. So you have financials, you have real estate, you have other things. But I think if you look at it in the last 18 months, predominantly all you can read about the IPOs are from the tech world. So it also becomes very concentrated. And so when you have a large pool of money chasing around a very small pool of supply, unfortunately, I think the supply and demand is not balanced, and then you see the stock going up in the aftermarket as a result. Obviously, you also read about some of the IPOs that are not as successful because they may be priced at a different valuation expectation from the market. But still, I think in a way, if you look at the Hong Kong IPOs, I think you probably have read some articles about some of these new economy IPOs not performing as well in the Hong Kong market. I think it's also a way that I think the Hong Kong market is still in the first inning in terms of knowing how to value these companies on a long-term basis. And so a lot of them got too excited when they go out because it is a Tencent invested company, or it is an Alibaba invested company that got people excited and chase stocks in the long term. But I think longer term, I think you have to revert back to mean, right, where the fundamental valuation should be, and some of that you can argue that had gotten ahead of itself at the time of the IPO. So I think we're back to a more kind of rational market, at least from an IPO standpoint. I think people are priced appropriately, and people are still chasing growth. I mean, there's no question about that. People are still chasing the growth sector, and the IPO market with all these tech companies are probably the best, a good benchmark for them to chase.
I think, I'm coming at this from a very different level from these two gentlemen who obviously got a different experience. I think the thing that, and I think you've probably seen it with the guys running this event, what I think is really interesting with the markets in the region, and you're seeing it all the time, we're not talking about businesses that are doing $1 billion revenue and listing at $40 billion market cap, but there is an increasing number of people who are both looking at regional markets, so like your ASXs, your SGXs, they're trying to also get more of these people onto those boards. And I think what's interesting for entrepreneurs is I think in some situations, it's an appropriate kind of path that people should be considering that maybe might not be the traditional VC route, where there are different ways to get capital. And I think that's the really interesting one. I mean, SGX is trying to do a lot now, but very little is going on in their market. But obviously ASX, I think some of them are up here to the last few days trying to really get a lot of those companies that are building businesses in this region to look closely at those markets. So different scale and different levels than your Xiaomi's of the world. But really just that opportunity to look at other alternative kind of paths to financing the growth of companies in Southeast Asia. I think that's interesting.
Yeah, I think I agree with Cameron that when you're looking at a listing as a means of fundraising or as a means of generally liquidity for investors, the different exchanges are suited for companies of different sizes, and you really need to understand what the investors behind that exchange like to see and what relative sizes. I was with the ASX this morning, and one of their pitches is, ASX is a very good alternative to the Series B. So they're positioning that exchange as a sort of series, as an alternative to Series B capital. And so they each have different needs and different costs, and depending on the size of your issue, different exchanges might make sense. But to add to that, I think is, like I said, we never had it so good, but, choice isn't necessarily a good thing. And so I was sharing the story that just a few weeks ago I was in Hong Kong, bringing one of my companies around, speaking with investment banks. And this company, based on plan, is US bound in terms of IPO plan, probably looking at a 2019 IPO based on 2020 financial projections. And, the conversations that we were intending to have in Hong Kong was we'd like to find out more about Hong Kong, whether it's a viable alternative to a US listing. And we were expecting some definitive answer, but there was none. In fact, we came out more confused than with clarity as to which was the right place to list. So companies at that scale, when you talk about generating exits liquidity for investors, there's lots of options to choose from. The other option, and this came from one of the investment banks and said, why are you thinking about an IPO? Talk to our private market platform, and we can arrange for some family offices to raise you a couple $100 million, and then you can push off your IPO to 3-4 years down the road, and instead of going out at $1 billion, you go out at $5 billion. And so they're navigating that system is, just as confusing or the decision is just as difficult as making the investment in the first place. So just wanted to share that story.
Thank you. And when entrepreneurs are looking at funding options, obviously the going public route is a signal that you are a permanent fixture in the market. It's a great branding event, especially if you do it in the US. It's a global branding event. Also for M&A currency and access to continual capital is also a way for your employees to relinquish some liquidity in their stocks. As an entrepreneur, Cameron, what do you see your timetable as being, and what do you see the benefits of going public for your business?
Again, I go back to my point before that there's this place called the rest of the world that isn't the tech sector, and going public at a multi-$100 million market cap is actually a very, very realistic thing for a lot of people, and people build some fantastic businesses. I mean, if you think about, there's the Elon Musks of the world, sure, but then there's the Henry Singletons of Teledyne and the Mark Leonards of Constellation Software, and these are companies that, Constellation Software has bought over 300 companies all around the $5 to $10 million mark over the last 25 years. And for me at least, I think that level of financial fluency may not exist with all tech entrepreneurs at this stage, but it's definitely something that I am trying, I'm not going to say I'm great at, but it's something that I think is a really interesting combination of combining, the venture capital world, but then also deeply understanding what you can do when you're public. In terms of timelines, look, end of the day, my job is fiduciary to get the best value per share and to create the largest company I can, and that means considering both paths, and obviously that depends on where we'll be at our next financing event, but definitely the ability to become an acquisitive company, to access kind of those liquid markets, especially if you can be within the indices of whatever market you're on, so that you have the high volume trading, so you can kind of create and issue more stock to raise more capital. I think, so there's some really interesting opportunities there. I think it's interesting, and I wouldn't personally, and it seems like a bad idea to go away when you know you're going to be in that kind of sub $100 million market. Like that's just, even though that we've seen some people do that successfully, obviously the catch guys have done that a few times, and that might be a special beast. But as I said, I think it's beholden to truly understand the other opportunities to people out there, and that to me is kind of the interesting thing. Is a CEO of a tech company, what path can we take where we can realize value for our investors, for our shareholders, continue to grow a very large and big business, and create a lot of value for our customers. So, and for us at least, that's why we're navigating, kind of exploring those alternative options.
Yeah, great, thank you. And also, when companies are looking at markets and comparing markets, so say they look at the US and they look at various Asian markets or regional markets, what would you both say are the advantages over the US? What facets of the US market do you think are helpful? And maybe converse that then with Asian markets, and how do you see the benefits of Asian markets?
I think as we advise our clients in terms of where they want to list, I think the boundaries are blurring quite a lot. I mean, as opposed to 5 years ago when you are an e-commerce company, US is probably your only choice. I think nowadays, first of all, I think on the investor side, most of them can invest in global company, global stocks. So it doesn't really matter whether you're listed in Hong Kong, you're listed in Singapore, you're listed in the US. The valuation should be, by definition, should be similar anyway. However, I think there's still a little bit of difference. I think as I've been taking some of these new economy stocks going public in Hong Kong over the last 12 months, you see that the level of sophistication in terms of how you value these companies longer term, there's some difference. But nowadays, I think the environment has been very good because all the local governments in Asia, Hong Kong, Singapore, Malaysia, Indonesia, Australia, they've all been encouraging technology company. They all want more technology company to be listed on their own stock exchange. So they're giving a lot of incentive. They are changing the rules to allow a lot of them to list in the local market. They want local champions, right? If you look at the US stock exchange, I think the top 5 largest companies now are tech companies. I think if you look at Hong Kong, there's probably, except for Tencent, the other one are still banks and telecom company, etc. So it hasn't get to that point whereby, if you think the markets are the same as the US, should be on every single stock exchange, the top 5 largest companies should be tech companies. But that's not the case. So I think that people are trying to encourage more local champions, but at the same time, I think you do require the local investor base to be more sophisticated, the local retail investor base to be more sophisticated. And sometimes it's story specific. I think Cameron's company is targeting a global audience. It makes sense for them to be listed in a global stock exchange so that their customers can see it and feel it, right? But if you are listed in Hong Kong, a lot of the times I advise our clients to have some sort of a China story before you go list in Hong Kong so that you can tie back to some of the investor interest from China. And same thing with Singapore, Southeast Asia as well, right? I was talking to, Jeffrey mentioned Ming Liang. I took Racer public last year, and we have a conversation with Ming Liang because he's also getting a lot of pressure from the Singapore Stock Exchange for them to be listed in Singapore. But at the end of the day, because their market is global, and being listed in Hong Kong or US will bring real tangible benefit to the brand, I think that's how they decide to list in Singapore, much to the SGX disappointment. Similar thing with C, because a lot of the comparable companies are traded in the US. They want to become against Tencent. They want to become against Alibaba, and these are the stocks that are not traded in SGX. So somebody needs to take a leap of faith, like Tencent, right? Tencent, when they listed 15 years ago, they choose to list in Hong Kong when nobody knows who they are. I think sometimes it takes a leap of faith for them to be the first one, for them to be successful, and then attract other people to follow suit.
I think when we look at this decision, it's about 2 things primarily. The first one's valuation, the second one's liquidity. But very often I think we get caught up in saying that let's compare valuation on this market versus the other market. Let's compare liquidity on this market versus the other market. When in fact it should not be more assessment of the particular exchange or particular market, but the suitability of the company towards that market, right? So as Alain was saying, that some companies are able to get higher valuation on a particular market because of the nature of the company, because of the reputation that they have in that market, and so on. So I think I don't think there's one answer to say Nasdaq is better than Hong Kong because valuations there are higher, because I think the valuations would depend on the type of company. So I think it is really that the company needs to look at itself and say, where can we attract a better investor base? Where can we attract higher valuations? Where can we attract better liquidity? And so I think those are the...
Absolutely. Thank you so much all for your time. I think we are out of time, but I hope that was helpful to potential entrepreneurs in the audience that are thinking about going public. Thank you.
Ladies and gentlemen, a nice warm round of applause for our speakers, Jeffrey, Alain, and Cameron. And we say thank you to our moderator, Rebecca Smith.